Good evening, traders. Today is Friday, March 3rd. We've had one hell of a last 2 days, haven't we? I have this tweet out that I wanted to show you on the screen right now. The last time I remember having a big move like this, other than FOMC, of course, was the October 13th low, the hive. Big moves. Tonight we're going to talk about some big moves, and for the first time ever, I'm actually going to use the daily chart that I never talk about. I actually found some very interesting patterns, macro level patterns, similar to how I see macro patterns on the weekly charts. I'm going to share that with you as it relates to what you're seeing on your screen right now. Big moves at critical junctures and what they mean. Big moves like this, like what's happened the last 2 days. We're going to get into the VIX as well. And then we'll get into the intraday stuff. What you're looking at right now on your screen is the hive. What happened on the hive? We all know what happened on that day. Third largest intraday point swing since 1967. Intraday swings 5.57% on this day. But look what happened after this day. Kaboom! Kind of like what happened the last 2 days, isn't it? Why do you think that is? Is because these last 2 days do mark the low of that downtrend that started on February 16th. Just like the hive marks the low of this bear market. You will see it conclusively now on the daily charts. That this was planned all along, it fits perfectly square with the patterns on the daily charts over all of 2022. Perfectly square. It aligns perfectly also with the June 16th low. You're going to see that all momentarily, that this is all part of the plan, that the bears were never in control, because I'm going to show you the VIX. Why was the VIX going down as the second half of February was ramping up, as the decline kept going lower and lower and lower, yet the VIX was going lower and lower and lower? Because this was all manufactured. Controlled demolition. The bears were never in control. You were just being led by the market makers to believe you were in control. But first, before we get into what I'm going to show you is the weekly charts, let's do a little recap of some tweets that I sent out, specifically calling out the SMA 20. You remember this? Right here. In this tweet, I'm focusing, out of all these lines, I am focusing on the SMA 20 right here. And I want to call your attention once again to what? Wake up. Wake up. Okay? Just want to call your attention to that. And this is just another review. What did I say? First 3 days are red, last 2 days are green. I sent this out, yesterday afternoon. Expect this to be a wake up. All right. And back to the SMA 20, the concept of SMA 20. This is the 1 hour chart. What I was saying here is what? Consolidating under SMA 20. Okay? That's bullish. Or wicking up from SMA 20. That's bullish. What do we have here? Wick up from the weekly SMA 20. The week before that, the big red week, found support, wick up from SMA 20. That's bullish. Now, look at this trend. Look at this is the weekly trend. You see how I always talk about the EMA 50, the EMA 50, EMA 50. This whole up move since January until March was simply to make a higher low. It went up above EMA 50, came down, lost the back test, found support at the SMA 20. Wake up. That's bullish. You guys who follow me on Twitter intraday always know I always talk about the SMA 20. If you find support at the SMA 20, that's bullish. If you wake up from SMA 20, that's bullish. Full stop. And once again, wake up from SMA 20. That's bullish. All of 2022 here, here, and here failed to overtake the weekly EMA 50 because the MACD was too far below the zero line here, here, and here. Well, this was just crossing into the zero line, below the zero line, so there's no chance that was going to take the EMA 50 back. But look at all these, except now, what's the difference? Major difference. The weekly is above the zero line and is separating. There is no mechanical justification for an impending crash. Period. You have no mechanical justification. You have no fundamental justification. It is not there. It is completely absent. And look, it's about to take back the EMA 50 for good. This is December. That's August. That's March. All of them failed EMA 50. Fail, 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 fail. But now look. Higher low right at the EMA 50. Wick up from the SMA 20 above the EMA 50. You cannot use 2022 to compare at all with what's happening this week. Now, are you ready to get blown away once and for all, you bears, to oblivion? Check this out. This is the daily. First, let's call attention to the pink line. So this is the January 4th peak, March 29th peak, August 16th peak, December 13th peak. That pink line is the downtrend line, is it not? The one that you guys love to talk about. Well, you can't pass that line. You're gonna get. I've heard other YouTubers. You're gonna come up here and then crack. It's gonna be the crack end right over here. Guess what? That whole down move in February was perfectly synchronized to do what? Meet right at the downtrend line where this wedge joins this channel line, and then boom! It was in the plan all along. Since I finally decided to use the daily, I now see it. I'm like, holy smacks. It was with perfect precision that you guys got played. The bears I'm talking about. Perfect precision. You could not have timed this any better at all when this downtrend line perfectly meets this channel line. Now, watch this. This is the same channel line that goes through the June 17th low. What happened when the June 17th low hit that channel line? Kaboom. Let's go fast forward to November 10th when it came up from below the channel line. Kaboom. January 20th came up, hit the channel line. Kaboom. And this week, Thursday and Friday, when it hit the channel line, kaboom. What have you got to say for that? And it just so happens the only comparison you can use for 2022 as far as the daily MACD is November 10th here, because that's close to the zero line, just like it is now. And what happened on November 10th? Uh-oh. No other times can be compared. None. Because your starting point is not close to the zero line at any other time. You cannot compare. You can't compare even June 17th because that's so far. It didn't even make it to the zero line. It just came up and then it started to fall. I was right here actually. June 17th MACD was here. Was right here. How far below the zero line is that? Way down there. That's March 3rd today. No comparison between June 17th. The only comparison you can make is you got a kaboom move. Just like you got a kaboom move when you hit that same channel trend line right there. But the huge difference is the MACD is close to the zero line now. Ever since the hive right here, guess what? Up, down, higher, low, up, down, higher, low. Uh-oh. That's what I mean. So now you have an official bounce off that downtrend line that defined the bear market of 2022. You have a retracement to it, and you have a vicious bounce up with the MACD close to the zero line. You don't have enough bullets left. There are more bulls than bullets. You can't point to anything on here that will say, oh yeah, we're going lower. You cannot point to anything on this chart that will prove, besides your opinion, that we're going lower. You have nothing. That's a fact. Because I'm going to show you the VIX soon too. Your only hope is the VIX. That's volatility. That's selling. Your only hope is the VIX. And last I checked, where the VIX closed at today? 1849? Uh-oh. This is just a zoomed in of the daily. This is what you can expect. Okay, see this green line right here? That is the August 19th gap right here. Right here. See that? There's your gap. 421.22. That intersects perfectly with this blue channel line right here that it's been, look at that. It's been making higher lows. It made a higher low and it touched it. Boy, did it touch it. It came close. So guess where you think we're going back to? I'm not saying that's we're going to get there this week. I'm not saying that at all. Oh no. But look at the natural progression. You bet we're going to return back to that blue line. We almost got to it here, came down. We touched it there, came down. Oh, we're going to touch it again. At this time, we're going to take 421. We're going to fill that gap. There you have it. We've basically been at mid-range right here. Here's the mid-range of the channel, that channel line. And now that we've officially broken this downtrend pink line, I think perhaps once we take 421, might need to start thinking about breaking out of this mid-range and going even higher than that. Why not? You've come this far. What's going to stop you now? So, I tweeted this out at noon today. Today was the up move. Basically, this is the weekly candle. Wake up, green body. green head. Wick up, green head. Next move. Think about it. Up, up, down, 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 up, up. Okay? But I think we could consolidate a little bit first. And I think that in this consolidation, so you could barely see it. 405, 405. It's back there. Yeah, we'll just call it 405 405 something 10. I don't know. I don't know what it is. It's this gray. This is the SMA 20 right here on the daily. That would be really bullish if the low next week is above 405, whatever that SMA 20 is, 405.10. I don't know. If it's above this gray line next week and it starts wicking up above it, ooh wee. Like the dailies start to wick up above that, that's really bullish. Really bullish. Okay, so it's sandwiched between the SMA and EMA. I think it's going to do some of this, and then boom. Perfect precision. Okay, so tonight in extended hours, big green candle right there, big green candle, big wick up, and the volume pattern left the bears a little something to think about right there. Yes, yes, yes. Sorry, I couldn't help but recognize that pattern. So, just like last night, I tweeted this. I said, hey, you know that MACD is going down in a hurry. But that's not actually bearish. That's to actually reset the bearish divergence that was developing late in the day today. And that's exactly how they got away with it last night. Because I tweeted that out to to someone else. I said, hey, the 5-minute MACD went, because yesterday it was a big move up. But overnight, they took that MACD right back down past the zero line and reset it. They're doing the same thing again. That's how you get around negating bearish divergences. Well, just take it back down and take it back down below the zero line to reset it on the 5-minute chart, while this kind of just floats. So, but I think next week, next week we could actually kind of, it's tough. It's tough to predict exactly what's going to happen. But as long as that hourly EMA 50 holds, then that's going to be a great sign. That's going to be a great sign. Let's go back to that. This is the daily. So as long as in this chop, a red candle body does not close below 399.61, we'll just call it 400. Well, 399.61. As long as it wicks up or a body does not close straddling 399.61, like this is bad. This straddles the line. See, and you see what happened after it straddled. It went lower. As long as 399.61 on the daily, the candle body does not close below that, that's bullish. All right. Oh, yeah. 2 weeks ago, I want to call your attention to this. 2242 was the EMA 50 line. That was the monthly. 2242 right here. I said it was going to do this and then that. 2242 is going to be a resistance the VIX cannot overcome. 2 weeks ago I said that. How'd that turn out? Oh, well, you're looky there. Here's the same red line. Despite a gap up, you couldn't take it back. Down we go. Just like how I drew those arrows out. You're going to try to come up, and then you're going to go down. Exactly. Despite making new lows during the last 2 weeks, right? We tested the 200-day moving average. We went lower and lower and lower. Yet the VIX is going lower and lower and lower. You got nothing, bears. There's nothing. You don't have enough bullets left in the chamber. Okay, let's get to intraday. We all know what happened. Actually, it was to my surprise because I ended up getting puts in the morning. Here, why don't we just go ahead and get on into that? But basically, I got puts. I soon got out of it and I scalped 2 calls today. Okay. I want to see if MM will take this up before taking it down. Basically, right here. Right? So it ended up taking it up. Right? Oh, I said, yeah, I'm likely going to short at 450, which is right here. Yeah, right here. Right here. I already had that target picked out. It will pump there for sure. And guess what? Yes, it did. Notice the wick down, trying to go up. You know, at the time, this big green candle was a wick down, right here. So I'm just calling out the wicks down, like that's selling pressure. Okay. Yep. This candle, this right here, is equivalent to that right there. Yep. Notice no back test to EMA 50. It never touched EMA 50 right here. See that? See the red line? That's actually a sign that it's cheating. That's actually a sign that it will come back down to backtest EMA 50. I learned that lesson this week as well. So if it doesn't even touch it and it kind of hovers above it and then it starts going up like it did, I was like, oh yeah, you're coming back down. You're coming back down to touch it, which it did right here. Okay. So this dashed line is the hive, by the way. It goes all the way back to October 13th low for you newer viewers. So it's not rejecting at the hive. It just kind of bypassed it at the time right here. This candle is equivalent to would be this wick right here. Okay, that's where it'll likely reject. I mean, it didn't. It never actually got there. It stopped and it wicked down and then it came down right there. Okay, that's what I'm explaining. 400.50 is the hive right here, right there. Okay, as soon as I saw this turn red, it was at the time. Got puts right there, scaling puts. I was like, yep, right on time. Now, going down, going down, going down, going down, okay? That's where I say I would be stunned if this passes the EMA 50 backtest. So I'm just calling that out. Uh-oh. Look at that. Green candle, green candle. No way. Okay? I'm already in disbelief. I said it again. No way. Backtest successful. Green candle. It's creating another one. Okay? So here's where I'm already like starting to be in disbelief. Like, no way. But look, I have a sinking feeling it's going to reclaim 40110, the 1 week EMA 50. This line right there. I have a sinking feeling it's going to reclaim it. See that? And we all know what happened after that. So I'm already starting to get that gut feeling, like, uh-oh, uh-oh, because wait, 928. I have a sinking feeling. I said that at 928. Oh, actually, I scaled into calls before. This is 924. Oops, that's a little bit off sequence. That's okay. I already scaled into calls, and I'm holding both puts and calls now. So I got my puts right here, and now I'm scaling into calls at around roughly the same level, a little bit higher. Okay, so now I got both calls and puts. Okay, this was my reason for getting calls. It backtested EMA 50 right here. First of all, it wicked. The candle body right here did not straddle EMA 50. It wicked up. And then you had this big green candle. I was like, oh. It backtested EMA 50. It took back the hive without, right here. This is the hive. It took it back without rejection. And now it's consolidating under the weekly EMA 50 right here. Right here. This is not bearish. Okay? So that would have been at this point right here when I sent that tweet out right here. I was like, guys, this is not bearish. That's why I got calls. I'm like, something's going on. Scaling out. So um, I scaled out of puts when I saw this push above the weekly EMA 50. I was like, that's it. I'm out. I'm out. So because it already demonstrated the strength. It passed the EMA 50. Now it pushed back through the high without getting rejected. And now you're pushing through the weekly EMA 50. That's all I need to see. I'm out. Okay? So I basically bought my puts here, sold it right there. So I took a loss, but it wasn't huge. Cuz I wasn't going to wait cuz at this point you see this big green candle push up past the weekly EMA. I'm like, I don't know if it's going to do this. I'm not going to stick around for that. I'm out. I don't know what's going to happen. Okay. Okay. It's shaping up to be a consolidation pattern under the weekly EMA 50. Here we go. When I sent that tweet, right, it's right here. Right there. And what do I say? Consolidation under a major line or major channel or a major EMA, especially the weekly EMA 50, or under a major channel. It was using the hive as support, wicking up, consolidating under the channel. When I sent that tweet out right here, that's bullish. That's bullish. Okay? No bearish divergence. Look at that. Look at that. Perfect neutral convergence going on here. Okay. Again, I'm focused on the SMA 20 blue arrow. That would have been right there. Right, yes, right here. That blue arrow that I drew out that tweet, look at that. It doesn't even need support at the hive anymore. Or yeah, it's just it's hidden bullishness. If the SMA is lost, right here, this right here, here's the SMA. If the SMA 20 is lost, then I can entertain bearishness. I sent that tweet out right here, guys. Look what happened to the right of it's hidden bullishness. So, okay, so we're talking about SMA 20. What did I show you earlier about the weekly SMA 20? Wick up. That's hidden bullishness. The jig is almost up, guys. If the next candle shows lift, then the 1 week EMA is reclaimed. Oh yeah, I think it was this one. Yeah, I mean at the time it was green, but the jig is almost up. I'm starting to throw out the warning. It's gonna do something. It's gonna do something. If this next candle shows lift, eventually it, you know. Okay, this is just bearish divergence is negated. There was some bearish divergence. Oh, that would have been. Can you even see it? Let's see. Can't really. I think it was. Oh yeah, you can't really see it, but it's right here. This is higher than that. Like this is higher than this. At one point, this was lower than that, even though that was higher than that. But eventually that curled up and went higher. Bearish divergence is negated. Okay. Hoo-hoo-hoo. Here we go, right here. I said, oh, I'm scaling long. I'm scaling more. I already got calls. Remember, I already got calls. Back right around here, and I saw this. I'm like, oh yeah, game on. Scaling more calls. Okay, got up to right here. Scaled out of some of my calls to scalp profits. Scale back. I'll scale back in soon. Okay, so yeah, scaling along again. Okay, so just show you. Got up to the blue line here. Got up to the blue line here. Right here. Right here. I was like, man, this thing's just getting started. Come up to here. Consolidate. Consolidate. Pop again. Okay. So, oh, this is just you know, reclaim review of scaling out of my puts. As soon as I saw the weekly EMA get pushed through right here, as soon as I saw that, I'm out. I'm out. I've seen enough. Okay. So here we go. I tweeted this. I said I went with my gut in the morning. My emotion says it can't be. It was at resistance. You know, right here is at resistance. But my head said the criteria is met. You back tested. You back tested the EMA 50 right here. You reclaim the hive, and now you're about to push through the weekly EMA 50. That's conclusive. That is overwhelming evidence that compels you to act. You must be compelled to act. You can no longer go on what your expectations should have been. That, man, this thing has been going up. All of last yesterday daytime and then all of last night it kept going up. Your expectations are, well, it's supposed to go down. Oh, well, that's why I bought puts too. But when you find contraindicated evidence that your thesis is no longer valid, you have to act on it. Okay? Okay, yep, it was consolidating right here. Right here. Consolidating under, 402.89 right here. This is the blue line. This is the 2011 matrix line. Look at that. Consolidate, consolidate, consolidate. Using the black channel line as support. Look at that. That's just hidden bullishness, right? It doesn't even need to go down. No, I'm just hanging right here on the black channel line. Okay. Well, where are we here? uh, Scaling out of calls. Let's see here. Oh, that would have been up here. Yeah, right here. Right here. Scale out. Yeah. Yep, 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 yep. Because it was right here that there's bearish divergence now. See that? This is lower than that right here. This is lower than that, but that's higher than that. Yeah, as soon as I saw that, I'm out. Oh, this is just a repeat. When I scaled out of my puts earlier in the morning. Okay, that was basically one of the last tweets towards the afternoon. You must trade in the spirit of Lady Justice. Blind to the news, blind to the media, blind to emotion. Close your eyes and tell me what you see. That's exactly how you should have traded today. Even I got puts, but as soon as I started to see contraindications that it was going the other way, I cut my losses and I reversed my trade. That's what it boiled down to. Can you recognize when the pattern is changing, where the pattern is not what you expect? Can you act on that in time? In time is the key, okay? And please feel free to follow me on Twitter, where I give real-time tweets like today and every day. Don't forget to listen to your favorite music while you are trading. It makes a difference in how you can get into your flow state, your state of mind, your zen. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 00, signing off.